Hi, I'm Megan Miller, Associate Wealth Advisor here at Towerpoint Wealth. Earlier this month, our President Joseph Eschleman sat down with Lora Painter of ABC10 for her segment Dollars and Cents to discuss the new One Big Beautiful Bill. This legislation makes permanent the tax cuts that were first introduced in 2017, avoiding what could have been a major tax hike and even expanding them. As they discuss, the standard deduction is rising again to $15,750 for single filers in 2025 and $31,500 for married couples, keeping more income untaxed. And an added benefit for Californians, the cap on state and local tax deductions has increased from $10,000 to $40,000, which may be a huge benefit for many families. In short, less money to Uncle Sam means more money back in your pocket. Let's hear Joseph's full conversation with Lora Painter on ABC10's Dollars and Cents.
We first talked about the Tax Cuts and Jobs Act a few months ago at the beginning of the year as something to watch for in 2025. It was scheduled to sunset at the end of this year. Right. Things have changed. It is now permanent, and there's some good news for taxpayers. Tell us about that.
Yeah, and I would say, Laura, it's probably permanent with a small dose of steroids, if you will.
Joseph Eschleman, president of Towerpoint Wealth, says if the Tax Cuts and Jobs Act did expire at the end of this year, most Americans would have experienced significant tax increases.
It was going to revert back to the tax brackets prior to that legislation passing.
The Tax Cuts and Jobs Act was originally passed by Congress in 2017 under the first Trump administration. It substantially changed federal tax deductions, rates, and credits. Now, the current 7 federal income tax brackets instituted back in 2017 are not going away, and the income thresholds for each bracket are also being adjusted upward to account for inflation and cost of living increases.
The bottom line is if the liability of an ABC10 viewer of a person living in here in California to the IRS is reduced, ultimately, that's putting more money back in their pocket.
Since 2017, tax filers and joint filing taxpayers have enjoyed the benefits of a higher standard deduction, which the act more than doubled. The Big Beautiful Bill raised the standard deduction even more, reducing taxable income for many households. Take a look. The One Big Beautiful Bill raises the standard deduction slightly from $15,000 for single filers and $30,000 for joint filers in 2025 to $15,750 for single filers and $31,500 for joint filers in 2026 and beyond, subject to inflation indexing.
Anytime we're able to realize additional cash flow and additional money in our pocket because we're paying less to Uncle Sam, I'm perhaps a bit biased as a financial advisor, but so much the better.
Eschleman says the larger standard deduction means more income staying in your pocket before taxes are collected. Eschleman says since 9 in 10 tax filers already use the standard deduction, this expansion increased the standard deduction's value further. The Tax Cuts and Jobs Act also capped the deductions for state and local taxes at $10,000 a year.
But the new Big Beautiful Bill actually increased the SALT deduction from $10,000 up to $20,000 a year. So for a lot of ABC10 viewers, a lot of Sacramentans, it's a huge increase in how much they're able to deduct off of their tax return and hopefully ultimately put back into their pockets to do with what they want.
That was an insightful conversation. Thank you again to Lora Painter and the ABC10 team for always trusting Joseph and our Towerpoint Wealth team with our financial insights. As you heard, these tax law changes mean higher deductions, a bigger state and local tax deduction cap, and more money staying in your pocket. But of course, every situation is unique, and understanding how these updates impact your personal financial plan can make a big difference. If you still have questions about the One Big Beautiful Bill, we'd love to help. Schedule a free 20-minute Ask Anything conversation with us here at Towerpoint Wealth, and let's talk through how these changes may affect you and your family. I'm Megan Miller, and we'll see you next time.